We are day trading the SP 500 futures. That's the E-mini. It's Tuesday, January 2nd. Happy New Year, everybody. Happy 2024. We've got a gap down. So a little chart analysis. We got a gap down. Right here. Boom. Gap down. Switch to the electronic trading hours. You can see that's just that, right? This move down. So we got a gap down open. That means from the close on Friday to the open of today is 30 points. Not a huge gap, but pretty big. Decent sized gap, let's put it that way. But then bar one was a bull bar closing near its high, decent sized bull bar. So what does that tell you? It tells you the market did not accept the gap. There were buyers waiting at the open, which tells you that there are bulls that think that a 30-point gap down is a deal, is a steal, is a good price. And there were enough of them to get that bar to close near its high. But then what happened? Then the bears came back. Fuck you, bulls, right? Look at that big old bear bar. That's like almost twice the size. Okay, so then the bears came back and said, no. We think the price is going lower. But then the momentum dried up, right? And then the bulls go, okay, we're back, right? So they were able to stop them, get this micro double bottom, and then another big bull bar closing on its high. 2 consecutive, right? And then the bears came back. So this was a second sell signal to me, because I'm like, okay, gap down, first push down. I guess that technically this would be the second sell signal, but you could look at it. If you're looking at the start of the day, you know, either this is the second sell signal, this is the second sell signal, right? Or this is the second sell signal. Okay, so I entered here, and then the bar failed to close past its midpoint, so I got out break even. If the signal bar fails to close past its midpoint, I entered on the 2-minute chart here. Okay, so that's a decent entry, right? Because you got 2 consecutive bear bars both closing on their low. So that was a good enough signal for me to enter. But then this bar started hesitating, right? And that's when I got out break even right here. And although technically we're still going down, right? The bulls started buying, boom, boom. So now we have 3 consecutive bear bars. But it's just more, I don't know. I think it's just wait and see, right? Wait and see if the bulls give up. Bears trying to wear the bulls down, obviously. Just a guy trying to make a little money, man. And why was I quick to get out of that short? Look at the daily chart. This is a small pullback bull trend. It's one of the strongest. I mean, look at this bull trend. This is the daily chart since October. So this is from October to January today, right? Tell me where you see 2 consecutive bear bars. Tell me if you could see a day where the bears were able to get 2 consecutive closes. They were able to get the day to close bearish twice. Non-existent. Until today. I mean, until yesterday, right? So this was the 28th. That was the last trading session. And then the 29th. So we have 2 consecutive bear bars. So the bears are gaining some steam here because that's the first pair of bear bars since October, right? But look at how weak that is. It didn't even close past its midpoint. Now they're gaining steam. But look. So I'm more interested in buying. And then where are we? We're actually right near the bottom of that prior sell-off, right? Right around here, which here was, breakout point of that FOMC announcement, near where the big move up was after the FOMC announcement, when the Fed announced that they were, planning some rate cuts for next year, and everyone celebrated. So what is this? Trading range. Trading range, right? We went down, we went up, we went down, we went up. Let's draw it out, right? We went down, we went up. We went down, we went up. We went down, we went up. So that's a trading range, lots of reversals. So what do you do in the trading range? Either you wait or you go for reversals. So in a trading range, my strategy says buy low, sell high, which means I would want to go short here or I would want to buy long here. But we're just hanging out. We're just hanging out for the past 5, 10, 15, 20 minutes. It's just like not going anywhere. So the market's deciding. We will get a breakout either to the upside or the downside. So let's keep that in mind. And let's draw both measured moves. There's an 80% chance of a measured move in either direction. So let's draw both of these. Let's do purple. And so that's going to be the bull breakout. All right. Let's do orange. Okay. So the likelihood is that we will see this or this. Is that clear? 80%, 80% likelihood. 15 points in either direction. ATR, wow, the ATR just shrank. ATR was 8, and now the ATR shrank to like 3 or 4. It's amazing how quickly that volume just dries up. Perfectly happy waiting. That's a lie. I don't like waiting. But I'm willing. I'm willing to. I should say perfectly willing to wait. Begrudgingly. Perfectly willing to wait begrudgingly. I want to trade, man. I want to get active, baby. I want to do some shit. So the question is, will the bulls give up? Obviously, the bulls are trying to get the move up. But after this, I'm like, mind you, I was short up here. And there we go. Good looking sell signal on the 2-minute. I do want to get in here short, but do not like when the chart does that. Tails on tails on the bottom of all these bars. Tails on the bottom of all these bars show that there's buyers down here. Remember, 80% chance of a breakout to the upside or the downside. Probably more than 80% chance. I mean, we're going somewhere, right? The question is if the bulls, well, if the bears get a big move down, right? Like if the bears close this bar and it's low, will there be buyers at the low? You know, there were buyers down here. We got this big push up. So we're gonna have to wait and see. Of course, I'm kicking myself a little bit for getting out of that short. Going to look very closely at how this bar 12 closes. Look at that red line we drew. This is why I love the ES. It's so precise. It's very good if you're trying to make money. You can count on these lines pretty closely. So if the bears are confident, why aren't they gaining momentum? Right? Why are there buyers buying into the close of this bar? Look at the 2-minute. That's here, right? I'm just going to shut up. What's it going to be, guys? Let's get some beats going. That's the biggest bear body and, you know, second biggest bear body since bar 2. If the bears are confident, why are they hesitating here? The market usually tries to reverse at bar 18, which is right around 8 o'clock, 7:55. So we'll mark that. And it could happen a bar or two before. It's just around that time. So we could expect to see a reversal here, maybe. Maybe the bulls try and get a push up to the average price. Markets are always trying to get back to that average price. So I have an order one tick below the low of 456. Right. One tick below here is where my order is. ATR is 5. We're going for a 4.5 point profit target. Nice work. $400. Man, those reversals require so much patience. That's what we like to see. Money in the bank, money in the bank, money in the bank. Buy here, sell here. Great song, huh? Great song. Francesco Pico, catch the moment. Okay. Spotify's fucking up. That could also be a swing entry. Hey friends, we're making money. We're day trading live on the internet. Dancing and day trading. Dancing and day trading. We're dancing and day trading. Dancing and day trading. I'm doing my money dance. That's my money dance. If you see me dancing, that means I just made money. What does this look like on a higher time frame? Looks like a trading range. You see all those big tails? Hour time frame. Yeah, indecisive. Maybe the bears get another push down here, and then the bulls get a push up. They give up, right? Markets move in twos and threes. So this could be the last attempt from the bears, and then the bulls take control, or we just stay in this range. You know. We gotta do another mental game checkpoint. Held. ATR was what? 5. Let's go back to that last song. That was awesome. That one's nice too, but that's the one I like. I call this Hannah House. I don't know if you like house music, but house music and day trading, dancing and day trading. It's a good combo, man. You got to keep your energy up. That performance stress curve. Okay. Mental game checkpoint. Mental game checkpoint. Mental game checkpoint. Let's show the executions. Executions with the labels. There we go. Go. Thoughts. What are my thoughts? Happy. Doing my money dance. That's called I just made money clicking buttons on a fucking screen. How the fuck? How the fuck? I just made money clicking buttons on a fucking screen. How the fuck? Remember I said the Bears might get another push down and then they might give up and then the Bulls take control? That could be happening here because then you have a wedge bottom. You've got a wedge bottom, possible wedge bottom. One push down, two pushes down, three pushes down. Honestly, if I don't take another trade the rest of the morning, I'm all right. I just aim for consistency, honestly. I don't even care about making money. I just care about consistent execution. That is the challenge, is to not think about making money while trying to make money. It's like getting laid. Usually doesn't happen by trying. You know? Usually happens by just having a good time, being yourself, making invitations. You know what I mean? Just too intense. Let's go back to that song I like the most. Catch the Moment. I want to show you guys a little trick. Check out this little trick. You guys know about this song Radio? And then it gives you a whole bunch of songs like that song. You probably know that, but it's not working for some reason. Catch the Moment. I'm gonna quit Spotify. We're gonna try reopening. Okay, let's try it again. There we go. Let's see what it brings us. Bring us goodies. Okay, so we're in a triangle. Bears possibly giving up there. Right at bar 18. God, I love the yes. That's a failed breakout. It's a failed breakout out of the triangle. So the bears are failing. Now the bulls are not succeeding yet, but yeah, I think it's safe to be holding long right now. I got a little freaked out with that push down. And I don't like entering with market orders. Literally holding 30 seconds longer. It's just $200. Also, I got out of that because if you could see, like, none of my orders are showing up in TradingView. Right, my position wasn't even showing on the screen, which is like very annoying. So let's restart TradingView. Worst thing is technical issues. Now it's showing. Yeah, I wish I held that long. I wish I held that short. But you just don't know. Let's go back to that injecting logic statement. The degree to which I think I know, assume I know, or in any way need to know what will happen next, no one does, is equal to the degree of failure I can expect in trading. I accept I do not know and do not need to know what will happen to win consistently over time. I do. So what do you have? You have a move down. You have the market going sideways. Let's count how many bars. Usually the market goes sideways for 15 to 20 bars. So we go sideways still here, right? And now we're at the bottom of a trading range. So yes, it makes sense to be holding long at the bottom of a trading range. Obviously, after the bears failing like that, you don't want to be holding short. And I really do wish that I held on to that long, but I'm glad I got out because I broke my rules. My rules for a trading range are not to enter with market orders, and I've gotten burned before doing that. Plus, like trading, like Tradeovate's fucking up. Wasn't showing my position or my orders. Like, yeah, it's usually best to just play it safe in situations like that. No point in taking a loss unnecessarily. Haven't taken any losses today. I mean, 2 break-even trades if you count those. And I do think we're going to get a push up. I mean, we're not getting a push down, right? So yeah, exactly what I said. Like maybe the bears get another attempt down, right? This was the first attempt. That's leg 1. This is the second attempt. That's leg 2. And that's the third attempt right here. And if trend continuation fails, then the bulls are going to start buying. Plus, you're at the bottom of a trending range. So you have 2 reasons to be long here. And remember, I said this was, I think I said this was also a swing entry. Why? Because you have a possible double bottom or a wedge bottom. This will be a better swing entry because now you have confirmation of bulls starting to buy. But will they get follow through, which is always the question. That's a good entry. Bull bar closing above a bunch of bars to the left. But tail on the top slightly decreases the odds. The problem is you have to use a pretty wide stop here. 10-point stop. Will the bears start selling near the top of the trading range or at the EMA? It's possible, right? Bulls aren't very confident. Bears aren't very confident. Look at that. Yeah, so I will not take this. So if I held, right, I entered here, would have given us 7.5 points. But would I have exited? Perfectly there, no. Will the bulls continue to buy down here? We'll see. There's just so much unknowns right now. There's nothing clear. There's no great setups. We're just ranging. Obviously, we're going to get a breakout to the upside of the downside. Does not look like we're going to get the breakout to the downside. Why? Because this, right, that shows weakness on the bears. Why? Because there were buyers down here. Again, it happened here. Okay. So, and it happened here, right? The bulls block the bears from getting past this price. So that means there's, buying pressure here. There's buyers here, right? But will the bulls get followed through? Are we just going to keep ranging? We might just keep ranging. I mean, we'll see. I need a break.